Good evening, good afternoon, and welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for August 29th, 2009. And check out our blog.accendotraders.com, and we put together video trade plans each day. And basically, the rest of our trading plan is preparing ourselves for the next trading day so that we can have successful entries and exits, know what's coming down the pipe, and be able to adjust any open positions. So let's look at the week that was. It was another week where the market ended up higher. You can see just slightly the Dow and the S&P and the Nasdaq all ended up slightly for the week, and we continue to be up for the year. Again, the stock market did post new highs. The S&P was up, and that was basically led by the financials. However, on Friday, we had sort of a mixed day, and we'll talk more about this on the charts. But we had Intel and Dell post better than expected earnings on Friday, which actually caused a gap up, and then we kind of fell from there. With Intel actually raising their guidance for the year. With the week, the economic data was kind of blah. It was better than expected. Housing, we talked about housing last week. Once again, housing was better than expected. New homes sales rose. It was the sharpest increase since 2005. Also, the Chase-Siller report also rose. So that was certainly positive. Consumer confidence rose to 54, above 50 is bullish. So, economic data wasn't impactful, which is, again, probably why we didn't have a big move one way or the other. No real earnings, no real economic data. When we finally do get something to move the market on Friday, we kind of have profit taking for the rest of the day. Preliminary second quarter GDP, which we were waiting for on Thursday, and it was slightly improved. They raised it to we're down 1% instead of 1.5%, but didn't really move the market. And also the FDIC list of problem banks rose to a 15-year high with 416 problem institutions. So what's coming on this week as far as economic data? Well, we got Chicago PMI on Monday, but the big thing comes out on Wednesday. We have the ADP, which is one of the employment reports, supposed to be a precursor to the non-farm. Sometimes it is, sometimes it isn't. We also have the FOMC minutes on Wednesday. Maybe there's some language there, and that's usually at 2 o'clock, so that could be some afternoon movement. Thursday, the usual jobless claims, but then Friday, we do have our non-farm payroll numbers on Friday. So we do have some job numbers coming out next week that certainly can move the market one way or the other. As far as we got tomorrow, we got Chicago PMI, no real earnings tomorrow, or really for the week. The best I could come out with was Joy G. So next week, really, I think it's going to be driven by the economic data of the jobs reports. So here we have the Dow chart here on a daily chart, and you can see we are kind of consolidating here for the week. We had a nice push forward on last Friday, and we have made intraday and closing highs for the year. However, again, you can see that we've kind of paired off here, and it is in technical sense to gap up and then close lower is bearish, but we all know, look at this, the market doesn't know bearish. But it certainly would be healthy for us to come down to the 20 moving average and move up from there. Let's go to the NASDAQ. Kind of same thing, the gap up, closing lower, a little bit more drastic here. But again, the parity here is actually more, you can see the NASDAQ's kind of resting more. When the NASDAQ was leading us, now it's just kind of taking a breather. And here's the S&P 500, same thing, big push up on Friday, and then just a bunch of wicks, bunch of topping tails for the end of the week. Last week we began looking at the monthly charts, and we can see where we're pausing at the 20 moving average for the Dow, for the NASDAQ. We're pausing at the 50 moving average. Again, the NASDAQ has been leading us. And the S&P is also sitting at the 20 moving average. So again, this is a natural resting place. It is a resistance that makes sense, especially to institutional traders. If we clear this, we talked about last week, and it's still true that we could possibly head to the 50, but again, we may see a little pullback before that. let's take a look at the internals for last week. So we're going to just take a real quick look at the internals. We take a look at last week, you see 84, 84, 93 as far as the breadth on the NYSE and the NASDAQ. But you look at this week, you can see 56. Anything above 50 is bullish, below 50 is bearish. But 50 is basically par for the course. And you can see that we really didn't push the envelope that much as far as the internals. And again, with our gap up day and ending closing lower, you can see they really didn't do much there. So the breath really looks like it's pausing. We're taking a breath. We're taking time to kind of see where we are, and hopefully with the economic news next week, we'll get some movement from there. But the breath right now is basically weak, not indicating a direction one way or the other. Now, as we take a look at our sectors, we might be getting a different story as far as have we come to resistance, getting a pullback. We're actually going to see some of our sectors are already pulling back. Here we have agriculture, and instead of kind of leveling off here, you can see they've already pulled back down. Now, a lot of them are leveling off. Look at that. That's a little bit more bearish. Again, a little bit more bearish than what we saw on our 3 indexes. The one to really look at is to get down here to trucking. But you can see either they're leveling off or, let's get down to trucking. You can see how bearish that is. So there's something that I'm like, with the price of oil going up, you can see trucking heading down. But overall, we're not really getting much with our sector look. Trucking bearish is the one that really sticks out to me. I don't really play those big gap ups. And then there's several other sectors that instead of leveling off, they are actually heading towards the downside, but they're heading to the 50 moving average. So even that's not a clue. So it definitely looks like the market needs something to move it one way or the other. Okay, as we head to our educational portion of our video, we're using the book Trading a Zone by Mark Douglas, and we're talking about the market's perspective. And we're continuing from last week where we talked about what separates beginning traders, inexperienced traders, losing traders, and professional traders. And Mark goes on to basically says that if there's one thing that can be identified as a secret of trading, it's that at the core of one's ability to be a trader, and more importantly to be a successful trader, can you trade without fear? Can you perceive what the market is offering? Can you stay focused in the now moment? And can you enter the zone regardless of what the outcome of your previous trades? And more importantly, without knowing what the outcome of the current trade is going to be. He basically says that the best traders have evolved to the point to where without a shredder of doubt, no internal conflict, anything can happen. See, again, you're not allowing emotions to drive your trading. You're allowing your trade plan to focus your trading. And regardless of how many times you've lost, you're able to still click your mouse and enter a trade. Now, that doesn't say you need to adjust your system. It just simply means that you can't allow this current trade to be affected by your past trade, good or bad. And the best traders are able to operate in that now moment. What is the market offering right now? Is that a new high? Is that a failed new high? Is that a reversal? What's going on? What is my entry exit? Is that my entry? Click. There's no internal conflict. Last time I didn't do so good. I lost the last time. I think I'm going to wait. No. It's if you get your entry signal, you have to click the mouse. Anything can happen. At 9 o'clock, 9:30, 3:45, anything can happen. So that's what separates good traders and bad traders. The ability to focus on the now, the ability to not be controlled by their emotions, the ability to enter a trade regardless of their streaks of the past, good or bad. So our blog is blog.accendotraders.com. You can follow us at Twitter at twitter.com/AccendoTraders. And we have another Spend 5 Good Minutes. Last week we had a good video on a futures day trading system. I'm not endorsing each products, but I think that they have good information, especially for those of you who are future traders. And this week my Spend 5 Good Minutes is with some guy. He has a very good video. Gotta admit, his voice is kind of, blah. It's kind of dreary. But I believe, especially for futures traders, that you gotta learn how to use tick. Tick is a great indicator. Thanks to a good friend of mine, Lydia, sharing that with me. So Tick's very important to the futures traders, and this guy has a good two-part series on how to use Tick to trade the ES. I traded YMs, and I would also like to take a quick minute to say two things. First of all, in that last slide, we talked about anything can happen, and that's one of the things we say in Dave Elliott's room on Thinkorswim. So I certainly want to send him prayers and hope that he gets well fast, and that he continues. Prayers go out to him and his wife and family. And today is my daughter's birthday, so I want to say happy birthday, Zion. Thanks, guys, and I will see you next time.